All right, so here's the deal. I'm a big believer whole life insurance is a highly misunderstood product. I think when we kind of take a step backwards and we start thinking about what are the attributes that I'm looking for in any asset that I have versus what are the product titles? Is it whole life insurance? Is it IUL? Is it mutual funds? Is it stocks? Is it annuities? Is it bonds? Is it, I bonds? Is it CDs? Is it a savings account? Like all these different things. They're all just tools. And what we need to stop doing is thinking about what are the titles of these things based on our pre-programming and start thinking about what are the attributes that I want from this asset and what attributes do I need my money to be able to provide me to be in alignment with my values and beliefs and what my objectives are. And so in this video, I'm going to talk about the top 11 attributes that I think are involved with every asset, and ultimately kind of break it down and show you why I believe whole life insurance is the most powerful asset in the world when utilized in accordance with other asset classes. That is the key. So make sure you stay tuned, and if you haven't already, subscribe and hit the bell. That way you're notified every time I launch a new video. And if you find value in this, please give it a like, give it a share, and we'll go from there. Can't wait to see you in there. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and for this video, we are talking about the 11 attributes that you need with your money, and ultimately why I believe whole life insurance is the number one attribute, number one product, because of the fact that it has more of these attributes than any other asset class. And I'm really excited. You can see behind me on the board here that I've got all 11 of them written out because I just want to be able to reference it, make my life a little bit easier. And so let's get into this a little bit. So first and foremost, you can see top 11 attributes. The first one is tax deferred growth. So tax deferred growth is a no-brainer, right? Like look at where we are in the world right now. We are almost $33 trillion in debt. We're $173 trillion now in unfunded liabilities. So when you combine those two together, we're over $200 trillion in the hole from a government perspective. Then we take into account the fact that we have increasing interest rates. The cost to service our debt is going up and up and up. We just hit our budget deficit for the country last month in the US, just hit a high, a multiple year high. And I think that, and if you look at the breakdown of that, the reason that is the case has everything to do with the fact that interest rates are going up and we have to pay the interest on the debt that we owe, that $32 trillion, almost $33 trillion. That's a real number. We got to pay the interest on that debt. And so when I talk about tax deferred growth, the reason I do is because when we defer taxes today and we pay or we basically are deferring paying those taxes, yeah, you get tax deferred growth. And that's really good. So people look at, okay, my 401k has tax deferred growth. Okay, that's great, but what does the distribution look like? So yes, the 401k covers part of it. It gets tax deferred growth. I'm gonna keep going into this because number two here that we want tax-free distribution. That's where the 401k falls down. So yeah, we want tax deferred growth, but we also want tax-free distribution. That's a key component. Now I'm gonna go through this list pretty quickly and then I'm gonna come back and talk about them more detailed in the areas that I wanna highlight. Competitive returns. I think everybody would say if I'm gonna put my money somewhere, I wanna make sure that the returns that I get are competitive. I want high contribution levels. High contribution levels are a big deal. This is a challenge with Roth IRAs. They're fantastic, but if you make too much money, you can't contribute to them. Even if you do contribute to them, you are limited. You're not able to put enough money into a Roth to accomplish your financial goals on their own. You're gonna need to subsidize with some other type of savings or investment strategy. You'd like your money to have additional benefits. Getting our money to perform multiple functions. If you can get $1 to have multiple jobs, that increases our financial efficiency and it helps you be better. It helps your money be more efficient and it helps you accomplish your financial objectives with more predictability and less risk. That's a big thing. You'd like to have collateral opportunities. This is a big one. Being able to leverage the money that we have, that we've saved for collateral to be able to open up opportunity, that is a huge deal. I know a lot of people utilize 401k loans, and you could do policy loans with whole life insurance. You could do policy loans with IUL, even though I wouldn't do that. But this is a big opportunity. I'm going to come back and talk about that more. You want to have your money safe, right? You don't want to lose. Warren Buffett said he's got 2 rules for investing. Rule number 1, don't lose money. Rule number 2, refer to rule number 1, right? So you want to have your money safe, guaranteed. You can't lose it. That is a big thing. At least from a financial structure perspective, you want to start with your money in an account that you cannot lose. That is a big thing. You would love to have your money in a place where it's protected versus creditors and lawsuits, right? Like, so this is the thing. If you go through a cycle and you have to file bankruptcy, if you're an entrepreneur, if you're a real estate investor, you're exposed to different lawsuits. You're exposed, your personal investments are typically exposed. Your business assets and your personal assets can typically be tapped into if you are sued or if you file bankruptcy. So making sure that you put your money in a place where it's protected against those things is an amazing benefit if you do it in the right way. You want unstructured loan payments. I guess I put this one out of order. So if we're talking about the collateralized opportunities and borrowing against it, what you're doing is you're taking a loan against that asset, whether it's your 401k, whether it's your life insurance policy, whatever. 401ks are not going to have unstructured loan access, right? Unstructured loan payments. So making sure that you have that unstructured component to it, especially if you're a business owner, real estate investor, doing flips, you want to make sure that you're able to manage the cash flow properly. You want to have liquidity without penalty and taxes. I think that's a thing that most people would want in an asset, right? Like, it makes no sense to me. This is the opportunity cost of putting your money in IRAs, qualified accounts, 401k, stuff like that. I think is the big thing, is the opportunity cost of not having access to your money until you're 59 and a half is just abysmal, right? Like, we should never put our money into a position where we lose control of it to that level. So it's a really, really big deal. And then ultimately what we'd want is deductible contributions. And so when we look at this and we think about, all right, what are the assets that do this? And this is why I love whole life insurance, right? So when we break it down, whole life insurance, does it give tax-deferred growth? Yes, it does. Does it give tax-free distribution? Yes, it does. Does it give competitive returns? I would say yes, it does. Now, a lot of people are going to say, Chris, whole life insurance, 4.5% internal rate of return over the long run, that's not competitive. That's not good enough. Well, I would argue that if it's tax-deferred growth and tax-free distribution, a 4.5% return is the equivalent of a 6.5 to 7% return in your 401k, because when you grow that money, you're going to pay taxes on the back end, and when you pull out 30% taxes, that's a big deal, right? So it's a competitive return there. And then the other thing is when we come down here, is a whole life insurance safe, guaranteed? You can't lose. Yes, it is. So if we look at it like this and we compare whole life insurance not to an investment, but to other savings vehicles, to other asset classes that have guarantees, right? That you cannot lose your money. Well, now all of a sudden, 4.5% right here in a whole life policy looks really darn sexy, right? Because now, I've had some people commenting on videos lately being like, oh, well, 4.5% doesn't even beat some savings accounts right now. Well, it does. You can get some high yield savings accounts right now. And that's fine. That will be competitive. The thing with whole life insurance is the market is going to tail. It's going to lag a little bit what's going on in the economy. So it's not as nimble, but we have to be thinking long term, right? Because you could find other things right now. You could find a high yield savings account maybe paying you 3 to 4%. You can go I-bonds that are going to pay more, but I-bonds aren't liquid, right? Whole life insurance policy, if you do it properly, is going to be highly liquid, right? And so when we look at safe, guaranteed, can't lose assets with liquidity, this 4.5% looks really, really amazing. Plus there are high contribution levels. I-bonds, for example, give a better return. They're illiquid, and you are limited as to how much you can contribute to them, right? So it's a big deal. I think it's like $10,000 per individual and per entity that you can contribute. And for people that have a higher net worth, it's just not going to cut it, right? Now, the other thing is like, this 4.5%, we're looking at beating inflation long-term. Now, we may not be able to beat inflation with it this year, but we have to be thinking long-term. And while these other accounts, these high-yield savings accounts might be competitive right now, as interest rates go up, life insurance rates are going to go up as well. Whole life insurance rates, I would be very, very cautious about index universal life rates and how IUL performs. I've got a ton of videos on that, so I'm not going to dive deep into that. But just know when I'm talking about this, I'm talking very, very specifically about whole life insurance with a participating mutually held company, right? And so while that's the case, as rates start to go down like they did in the 80s and 90s and 2000s, as they go down, what's going to happen is the high yield accounts, the savings accounts, are going to go down. You're not going to get those returns. But the beautiful thing about life insurance companies is they do one thing better than any other institution in the world, is they manage your risk. And they're going to do one thing, is they're going to beat inflation on a long-term perspective in your safe, liquid, accessible capital, right? So no other place is going to do that long-term. Can you find isolated vehicles in the short term that can do it for you? Absolutely you can. But if you keep making short-term decisions, you're going to keep getting poor long-term results. We got to be thinking long-term, and you got to plan for the long-term. So that's a big thing. Additional benefits, having your money perform multiple functions. This is a monstrous one. There's no other asset in the world that will do for you what life insurance will do for you with a properly designed whole life insurance policy, because, and this is what I mean. So it gives you collateral opportunities. It gives you what we call ABRs, which are accelerated benefit riders. It can allow you to have a volatility buffer for retirement income. It allows you to have an opportunity fund. It allows you to use it as an emergency fund. And if you become chronically, critically, or terminally ill, meaning basically if you lose 2 of 6 daily living activities or abilities, or you get cognitive impairment like dementia, you can access your death benefit while you're alive. I share the story about my father-in-law a lot, getting pancreatic cancer, having to utilize alternative treatments, being able to tap into the death benefit to be able to get those treatments. I mean, it's a couple $100,000 of alternative treatments for a cancer that typically kills people in 3 to 6 months. 2.5 years later, he's still here, right? And he's still playing golf multiple times a week. And this is just, it's pretty awesome, right? And so getting that money to perform more than one duty. We all have these things that we need to deal with, whether it's disability insurance, long-term care. People don't realize the importance of that. And unfortunately, most people don't have the cash flow to be able to have all these different bills, to have a disability policy, to have a long-term care policy, to have an emergency fund and an opportunity fund and an investment account for retirement and all these different things. So having an account that has your money performing multiple functions increases your financial efficiency and helps you get to where you want to go, once again, on a more predictable basis with less risk. And that's a big thing. So you do this because safe, guaranteed, can't lose. Once again, I'm going to come back to this and talk about this for a second here, because this is about financial structure. Now, I'm not saying you don't have to take risk to get to where you want to go, but you need to build your financial foundation before you go and take the risk. And so that's why I'm a big believer. You need to start by putting your money into places where it's safe and it's guaranteed and you can't lose. And the thing is, when you do that, you need to make sure that you have that competitive return, that you're going to beat inflation, so you're not fighting losing your purchasing power value over time, like by keeping it in a savings account, right? So that's a big deal. Performing multiple functions, I guess, the other benefit is you have life insurance, right? That is something that I think if you have a family, if you have business partners, you need to have life insurance to protect your family. You need to have life insurance for buy-sell agreements with your partners. That needs to be in place. If you don't have that, unfortunately, over 85% of this country is underinsured as far as life insurance goes. That's an abysmal number, in my opinion. And if people understood this, it literally could change the way people operate from a generational perspective, especially minorities that are dealing with all this stuff. There's been a lot of this stuff out there. I think it's a really big deal to contemplate. So I encourage everybody to dive deeper into that concept and understand that. Protected against creditors and lawsuits. Life insurance, when you put your money in there, in most states, it is protected against creditors and lawsuits. If you file bankruptcy, if you get sued, that money is insulated. So that's why, for what I do with cash flow hacking, having your money in the life insurance policy is an amazing, amazing, amazing way to go as far as insulating and protecting your assets. Now, you can have an LLC, you can have a trust, you can have those entities also own and control different assets depending on what you're doing and what your structure is. That's not for me to tell you what to do. Go talk to an attorney about that. But having your money inside of the life insurance policy in addition to that is just an extra layer of protection that you cannot get anywhere else. Unstructured loan payments. When you go and take a loan, so when we talk about collateralized opportunities here, and whether you're taking a 401k loan or a policy loan or you're getting some other cash-backed loan, typically you're going to deal with structured loan payments. And structured loan payments are can be detrimental, right, to the cash flow situation, because we've got a lot of businesses that are very seasonal, so cash flow is up and down. So being able to manage those, whether you're making major capital purchases for these collateralized opportunities, whether you're looking to buy a business with it, whether you're doing a fix and flip, whether you're doing hard money lending, being able to have unstructured loan payments to that, to be able to manage that cash flow, manage your business, can increase your opportunity and allow you to go and do some creative things that you can't do with any other asset. Once again, life insurance is the only asset that I know of that will allow you to do that, and I've looked at a lot. Having liquidity of the money without penalty or taxes, this is a big one with qualified accounts. Yeah, you can always tap into it, but the problem is people are typically trying to tap into this money. They're gonna pay taxes, they're gonna pay penalty, and they're typically doing it when the market is depressed, it's going down, and so they're liquidating negatively performing assets maybe after it's lost 10 to 30%, and then they're paying taxes, and then they're paying penalties. So at the end of the day, if you had 100 grand to start the year, you're probably liquidating 40 to 50 grand at the most by the time all your taxes, penalty, and losses come into the equation, and so that's a big deal. And then ultimately, deductible contributions. Now, this is ultimately what you would want. This is the only one that whole life insurance doesn't have right there, right? So when we look at deductible contributions, that's a 401k, that's an IRA. You're deferring taxes typically to pay taxes later, because if I defer and I get deductible contributions right now, that's not really a deduction. I get a deduction this year, but it's really a deferral from a long-term perspective. If I deduct it this year and get the deferral, I'm going to have to pay taxes later. And as I talked about at the very beginning, where do you think taxes are going? They're going up. I mean, you might not agree. I think they're going up. Because let's face it, with the world the way it is, and with the debt and the interest rates and inflation and all these different things, we have to be able to service that debt. And so that's a big, big deal. And so I'm a big believer that pay the taxes now, control your money, focus on these ideal 10 assets that are whole life 10 attributes, right? If you focus on these things and you realize, I think once people realize these 10 attributes and you realize like, okay, I want that, I want that, I want that, I want that. What would my life look like if I had the ability for collateralized opportunities and money in accounts and my life structured with this financial guarantees and the foundation built properly? If I could go out and invest and not have to worry about all these different elements, and if I could increase my financial efficiency by doing these 10 things and having my money in an asset that allowed that and increase my financial efficiency, it would open up a world of opportunity. It would build you into becoming the type of investor that you need to be to get to where you want to go. That's ultimately what it comes down to. So if you have any questions about any of that, I hope it makes sense. I would say comment in the comment section below. If you haven't already, make sure you subscribe to the channel, hit the bell, do all the things, like the video, share the video if you found value in this. Hopefully you did. If you have any questions about this, feel free to reach out to somebody on the team. You can see, I have a link down in the description below. You can set up a free clarity call, figure out what this might look like in your life. Feel free to reach out to us. Happy to help in any regard, any way possible, in any way, shape, or form. You can also just email me, Chris@Life180. I do my best to respond to every single email that I get, every single comment that I get. I'm really, really passionate about serving people. This is why I do this channel, to be able to help people have clarity about this industry, because unfortunately, I'm a big believer, life insurance is one of the most misunderstood assets in the world. And unfortunately, most life insurance agents don't even understand it fully. Whether it's whole life insurance or IUL, they're both massively misunderstood and a lot of times massively misrepresented. And so I'll save that stuff for another video. So if you have any questions at all, do that, hit me up. And till next time, have a blessed, inspirational day. We'll talk soon. See ya.